Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the MarketSite studio, Phil Mackintosh, chief economist at Nasdaq. We're going to take a look at tackling some issues within ESG to get it on the right path for the future. Phil, it is great to see you as always. Finally catching up after all the travel that we're seeing here. I mean, you can really tell that we're kind of back on the track that we were prior to our pandemic shutdowns. But I want to talk about ESG investing for a moment. It's really gaining traction in the US, starting to somewhat catch up to our counterparts in the EU, but building an ESG-focused portfolio has its number of challenges. Why is that?
It sure does, and part of the reason is you think about how we pick stocks now, and often it's to do with sales growth or profitability of a company, and that kind of naturally falls out from hiring an accountant and tracking what's going in and out of the bank accounts. It's relatively easy and it's all numbers, whereas ESG, you've got to score things differently. You need scientists to tell you how much carbon a different factory is emitting and work out what's actually good social and what's good governance policies and try and track things that just don't actually get reported at the moment. So it's really a difficult problem to solve for the mutual funds that are trying to build the portfolios for the investors, because at the moment the data is just not out there.
Yeah, well, I mean, it's a challenge. It can be arbitrary and subjective. I mean, if you have 100 million in cash, you have 100 million in cash. You really can't debate that. What does the data tell us about ESG fund flows?
Well, the interesting thing, you're 100% right. Europe's been much stronger in growing ESG accounts for a long time. In the US during COVID, though, we saw some pretty strong inflows coming through our investment data, where it looks like at last in the US, there is some genuine investor interest in ESG portfolios. One of the interesting things, though, about even the ESG data is it's like, are you a dedicated ESG fund? Is that all you're focused on? Or are you kind of looking at it as well as a whole lot of other things? And so the asset disclosures that you'll see, or the people will claim sometimes that there's an awful lot of ESG assets, but really the very focused funds still haven't made up that much of the asset universe.
What proposals and regulatory initiatives are being provided to help investors when it comes to picking ESG stocks?
Yeah, there's a lot. So one of them is what we just talked about. It's actually the fund name rules, so that companies or mutual funds have to make sure that their name is clear if it's a really focused ESG fund or it's just part of what they look at. But some of the other standards are looking at how to get companies to actually create the data that mutual funds need to pick the stocks that investors want to invest in. And so there's a lot of rules out there looking, a lot of it's on the E side, so the environmental side, and a lot of it's counting carbon. But there's international rules, the US regulator, the SEC has got different rules coming out now too, mostly to try and help companies work out what they need to disclose and what kinds of carbon emissions they have to actually add up.
What are companies concerned about when it comes to these proposals? A lot.
A lot, yeah. I mean, all of the cost of doing this is really going to fall on the companies because they're going to have to create the data. And there's thousands of companies and they've got thousands of customers and thousands of suppliers. And a lot of the rules actually mean you have to count up the whole value chain. So you're going to need experts that aren't accountants. You're probably going to need scientists or sort of advisory people that you don't have to hire now. You have to keep track of a whole lot of data that you don't keep track of now and a whole lot of new rules that you've got to comply with. And so the basic complaint that companies have is they don't really have the skill set for it now, and they think it's going to cost a lot of money. And a lot of small companies don't have all that much money to play with. They're trying to become profitable as it is.
At the end of the day, it sounds like getting ESG right as it stands right now is a little bit tricky.
Yeah, and I think in reality, a lot of the standards are focusing on the E part, so we're not even going to get the full E, S, and G in the early stages. Still, some of the index providers like MSCI and others are trying to put ESG indexes together using all sorts of different methods. That also just means that if you're a mutual fund, there's all these different kinds of indexes to try and work through and work out what they're really telling you. It's complicated.
It is tricky, Phil. All right, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.